And in our top business story, the Department of Economic Development in Dubai has revealed that in 2015 it issued 22,691 business licenses, an increase of 17.4% compared to the total number of licenses issued the year before. According to the department, this is a clear indication that Dubai remains an attractive destination for companies and investors due to robust economic activity prevailing in key economic sectors in the Emirate. The latest achievement also rounds up a 75% increase in new licenses between 2010 and 15 at an annual average of 15%. A total of 17,131 commercial licenses were issued in 2015, up 16.3%, while there was an increase of 9.2% in the number of tourism licenses at 250 and 8% in the number of professional licenses at just over 5,000. The industrial sector also saw a 10.5% increase in licenses issued, rounding up another year of growth for all key sectors in Dubai. Commercial licenses accounted for 75.5% of the total licenses issued in 2015, while professional licenses had a share of 22.1%, followed by industrial at 1.3% and tourism at 1.1% of licenses. Officials from the department stated that the number of renewed licenses increased by 7.8% and the number of amended licenses rose 64.8%. The department also saw a 31.2% rise in the number of initial approvals, which reached over 39,000 last year, and a 17.5% increase in the number of reserved trade names at over 61,000. According to a new study, Dubai's property markets are likely to move back into growth by the end of the year, underpinned by its expansionary budget. A report from Redin Global Capital Partners said that Dubai's 12% budget increase will serve as a fiscal stimulus. This contrasts with its response in 2008 when spending cuts imposed as a result of the global financial crisis amplified the contractionary impact on the economy. It also said there was an intertwined relationship between budget spending and property prices, with an increase in the former having a positive impact on the latter. With continued population growth of between 5 and 7% fueled by the arrival of more middle-income families and with transaction levels already showing an increase within certain communities, property analysts believe an inflection point would be reached by the end of the year as the market moves back into growth. Citing affordable homes in areas such as Discovery Gardens and International City, these have declined by only half of the rates experienced in more expensive communities. This opinion, though, is not universal, with other real estate analysts stating in a local report that there is still some room to go in terms of price reductions. A key measure of demand for loans in the UAE has turned negative for the first time since 2014. That's according to a survey conducted by the Central Bank. The survey, which tracks demand for loans, moved into negative territory in the fourth quarter of last year for the first time since the bank introduced it in 2014. Recent figures from the sector have shown that small businesses and individuals have been shying away from borrowing. Banks have also become more reluctant to lend at a time when bank deposits are dwindling amid a climate of lower government revenues from the sale of crude oil. The central bank stated that in its quarterly credit sentiment report survey that overall credit conditions appeared to have softened further following consecutive quarters of robust demand since the inception of the survey in 2014. It added that such results likely reflect heightened uncertainty surrounding the global economy and the low oil price environment. The central bank said that its net balance measure in aggregate for business loans dropped to minus 8.1 in the fourth quarter, but it expected demand to improve in the current quarter. Demand for personal loans also dropped since 2014, dragged down by weakening demand for housing loans. The respondents to the survey cited rising interest rates as one of the main reasons behind customers shunning debt. And United Arab Bank has announced its financial results for the 12 months ended 31st December 2015. The bank reported a net loss of 166 million dirhams, primarily driven by provisions taken during the second half of the year. Total income was 1,213 million dirhams, which represents a 12% reduction when compared to prior year, with operating expenses of 491 million dirhams. Consequently, the bank's cost-to-income ratio increased to 40.5% in 2015 versus 28.7% for the fiscal year 2014, with the uplift primarily driven by one-off restructuring initiatives to streamline the bank's ongoing cost base. The bank's non-performing loan ratio of 4.01% was broadly in line with 3.93% in Q3 2015. The bank's coverage ratio of 124% was also consistent with the bank's policy of maintaining a ratio at or in excess of 100%. The United Arab Bank strengthened its funding profile in the fourth quarter, as evidenced by its loan-to-deposit ratio improving to 93% in Q4 2015 compared to 96% for both Q3 2015 and fiscal year 2014 respectively. In line with the bank's focused deleveraging strategy, total customer loans and advances declined 13% on prior year to 15.7 billion dirhams, with customer deposits of 16.8 billion dirhams for the year.